Phew, there was blood on Wall Street today. The Dow lost almost 600 points, while the Nasdaq and S&P 500 both lost about 1.5% each. And yet, looking at the fundamentals, we still think the stock market is on sale right now. You should go long. Let's start off with crude oil. No surprise at all there. It hit about $106 a barrel today. I'm referring to WTI crude here. This should come as no surprise to you at all. By now, we already know that the power brokers must be doing cartwheels over that steep price of crude oil. They have always wanted it through the roof. And now they have a credible excuse to blame it on. We're not fooled. They can pin the blame on Russia for all they want, but we already saw this coming long ago. In fact, we can say it's heading for 125 or 130 pretty soon. With the spike in oil price, the 10-year yield dropped while the Dixie spiked. You already know that this combination signals a run to safety. Investors are seeking safety and staying away from risk. This is expected. It, however, does not mean the market is crashing. This drop is going to be short-lived. This is not the market crash we are all expecting to happen one day. Meanwhile, tonight is the State of the Union address. Expect the U.S. President to make an attempt to calm the markets. He will talk about inflation and offer all the expected lies of how they have it under control. Of course, they don't, and they know it. They just think we are fools when they say these things. But the important thing here is that he will speak in codes. He will say that the might of the U.S. government will seek to help mitigate the suffering of the American people. This is the code. It is an indirect submission to the will of the Fed. The only solution the government of this country has is running to the Fed to request for money, more debt. And the more debt we have, the more useless our dollars become. They don't care, but what does that do? Their so-called solution only leads to more inflation. And this also means the inflation of assets. In this case, the stock market. Hence, this is a key indication that the stock market will rally, not the opposite. The inflation is already evident in everything around us. If you don't feel it in gas prices, you must feel it in your grocery bill. And it is also affecting the market in certain ways. Though the major indices were hammered hard today, commodities went parabolic. In fact, wheat, for example, took off so rapidly that at some point, they had to pause trading. Truth is, in this environment, everything is going to rise. And soon the stock market will reflect this in a rise of asset prices. Yes, the volatility may persist. Certainly. But you will soon find that with more money pumped into the debt market, the stock market will inevitably rise. The markets of today run on debt. Hence, the more debt, the higher the market. That is why we are so dogged in the notion that you should be buying this deep in the market. Because this market has nowhere else to go but up, up, up. It is our belief we are soon going to see a rally leading to yet another record high. Before getting ahead of ourselves, recall we talked about how the president will try to calm the markets and the people. One of the things he will also talk about is how the U.S. released emergency oil reserves of about 60 million barrels. This is insulting. Do you know how much oil the U.S. consumes in a day? You can do your research on this. However, the number is about 20 million. The U.S. consumes about 20 million barrels of crude a day. So tell me, what does a release of 60 million barrels do to ease the suffering of the American people? See the games now. See how they are playing us. They assume all of us are fools or have never heard of something called Google. Anyways, just brought that up to offer a proof that there is nothing they can do to ease our suffering. It is our responsibility to take charge of our lives. And the stock market can offer that much-needed opportunity. Just practice proper risk management. So moving forward, what else should we expect this week? With the Pentagon giving out defense contracts yesterday to Lockheed and Northrop, expect those stocks to continue to rally. This war in Ukraine is an opportunity for lots of people to cash out from this. After all, yesterday, the U.S. promised to send an additional $350 million in defense aid to Ukraine. The EU offered €500 million in military aid also to Ukraine. This opens up some form of arms race again, perhaps even Cold War 2.0. It creates a perfect reason to keep printing money by our Fed. And of course, for the government to keep robbing us through inflation. When this volatility stops, which it will at some point, the market will adjust accordingly. And once again, the only place it has to go is up. Over on this channel, we enjoy looking at the futures market. If you look at any of the indices right now, you will see that despite this huge drop we had today, none of the indices broke through the last resistance. Though this is not financial advice, it won't be surprising if the markets open a bit lower in overnight trading before struggling to recover tomorrow. This too is indicative this is an excellent buying opportunity. But hold up, before we continue. Let's just say that our belief the stock market is in a buy region does not mean we think the economy is doing good. In fact, the economy is crumbling, probably at the fastest rate we may have ever experienced in our lifetimes. All right, how about we begin with the bad news first? The numbers are in. The U.S. trade deficits hit an all-time high of $107 billion. That is a 7.1% increase in January of this year. And if you think the numbers can't get even worse, then let's shock you. It is the second month in a row we are having an all-time high number. In December of last year, it stood at $104 billion. And in January, it shot up by some $3 billion. Of course, we expect that number to continue rising. If you don't get what trade deficit means, here's a simple way to look at it. It is the difference between our exports and imports costs. So in simple terms, in case you still don't get it, the economy is crashing and that our dear friends is the new norm. Worse and worse economic news. However, the mainstream media is on the mission to tell you just how well we have recovered. And on the back of that, we have a ton of unemployment and total destruction of the middle class. But guess what? The stock market will continue to go up. That's the new norm. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day. So please be at liberty to check out our other videos. It really means a lot to us. Thank you.